Hi everyone, welcome back to my channel. When I went to university in 2006, the average tuition fees for one academic year was only around $4,500. Over the past 15 years, the average tuition fees for undergraduate programs increased by almost 50%. Education is very expensive, and it is important to start investing for your children's education as early as possible. I'm going to talk about our ESP in two separate videos, as I noticed that my viewers generally don't watch the full video if it is longer than 10 minutes. In part 1, I will discuss the basics about our ESP, the contribution limit, the benefits for investing in it, and the government grants. In part 2, I will discuss the types of plans available, the tax consequences of withdrawing money from our ESP. I will also explain the strategies for maximizing the value of your plan, as the tax treatment of contributions, government grants, and the income growth are different. Registered Education Savings Plan (RESP) is a type of savings account registered with the Canada Revenue Agency. The purpose of this account is to save for education. Same as RRSP, it offers tax deferral on investment income. However, unlike RRSP, contributions to RESP are not deductible from income. There is a lifetime contribution limit for each beneficiary. For 2007 and subsequent years, the lifetime contribution limit is $50,000. If you opened an RESP for your child, and if your parents also opened an RESP for their grandchild, the maximum contributions for the two RESPs is still $50,000. Excess contributions are subject to a 1% per month penalty. You can make contributions into an RESP until 31 years after you first opened it. For an RESP contract, there is a subscriber, promoter, and beneficiary. The subscriber enters into a contract with the promoter, such as a bank. Under the contract, the subscriber names one or more beneficiaries and agrees to make contributions for them. The government provides matching on the contributions if the eligibility criteria are met. So, who can open an RESP? Generally, anyone, such as the parents, grandparents, other family members, and even friends, can open an RESP. However, there are restrictions for family plans, which can only be opened by someone who is related to the beneficiaries by blood or adoption. According to the CRA, an individual can be designated as a beneficiary under an RESP only if both of the following conditions are met. The individual's social insurance number is given to the promoter before the designation is made. The individual is a resident of Canada when the designation is made. There are many benefits for investing in an RESP. Any income you earn in the plan is exempt from tax as long as the money remains in the plan. Since you don't have to pay taxes on the investment income, your money can grow faster. Also, since withdrawals will be included in the student's income, who will likely be in the lowest income tax bracket, they likely will not have to pay any income taxes on the withdrawals. Finally, The government matches a percentage of your RESP contributions. The basic CESG is 20% of contributions made to the RESP, regardless of income, up to a maximum of $500 on an annual contribution of $2,500. The lifetime maximum amount of CESG a child can get is $7,200. Unused CESG contribution room is carried forward and used when RESP contributions are made in future years. However, the maximum CESG payable in any year is $1,000. To be eligible for the CESG, a child must be under 18 years of age, be a resident of Canada, have a valid social insurance number, and is named as a beneficiary in an RESP. Also, there are additional eligibility restrictions for children who are 16 or 17 years old. Please refer to the CRA website for details. Middle and low-income families qualify for the additional CESG, which is an additional 10% or 20% matching on the first $500 of contributions. The maximum amount of CESG a child can get, including the additional amount, is $7,200. The Canada Learning Bond (CLB) is money that the government adds to an RESP for children from low-income families. It provides an initial payment of $500 for the first year the child is eligible, plus $100 for each additional year the child continues to be eligible, up to age 15, for a maximum of $2,000. Personal contributions are not required to receive the CLB, so this is different than the CESG. In Part 2, we'll look at the three types of RESPs: the individual plan, family plan, and group plan. We'll also look at the tax consequences of withdrawing money from RESP and how to maximize the value of your RESP and minimize tax consequences. Thank you so much for watching. See you next time.